Folks, good morning and welcome to Stock Charts Today. This is Bob Desmond over the Contrarian Trader. This is where we review the pre-market activity as well as roll into members' stock chart request. And that's where we review the symbols that our members submit for me to review on video. Members, if you haven't watched the week ahead commentary, which is our strategy session for how we proceed into the new trading week, it was published yesterday. It is published in the members area. Please check it out. A lot of information in the week ahead commentary related to all the economic data that is coming out this week. There is a ton of it, as well as Fed Chair Powell being up on Capitol Hill testifying in front of Congress. We will see volatility this week, folks, in one direction or the other. And guess what? It has already begun. How do I know? What you're looking at here is a chart of the US dollar, a 1 hour chart. And we broke down this morning below the lows seen on the 21st, but we have since bounced. And you may be saying, why is that significant? We haven't taken out the lows of last week. Why is that significant, the fact that we have broken down below the lows of the 21st? The reason is this, is that I always like to say the markets send you signals. And the signal here on the 21st, albeit a 1 hour chart, therefore volatile, is that we saw a bullish key reversal. That implied that this breakout above this, let's go to a 4 hour chart, pull back some. Our breakout above this resistance level in red on the 20th was then validated by a pullback and a retest, and then you saw buyers step in, drilling the dollar higher. We have now begun to put in a series of lower highs, and we are now breaking down to lower lows. Why is that significant? The reason is that on a weekly basis, we're in a downtrend, right? I know it's messy with all these lines here, but you can visualize we are in a downtrend, and that downtrend, which has abated these past couple of weeks, may in fact now be resuming to the downside. Why does that get me excited? Well, it gets me excited because we are levered to the gold mining stocks, to silver, to agriculture in anticipation of a move like this. Now, as I started off this commentary with, let's go back to an hourly chart. We have a lot of economic data coming out. I cannot get all excited and respond to this price action at the open today by adding to my positions. I am going to do a pulse check of the market. We'll be talking about it with members on Market Wrap each night about what economic data has come out, how the market is responding, and how we plan on adjusting our portfolios to address either a decline in the US dollar from these levels, or if the dollar recovers. If the dollar recovers from these levels, well then, we have a problem with the commodity trade, right? It probably means that the Federal Reserve is forecasting 3-4 rate hikes in 2018, and or we're seeing strong economic data. So while we have a weak morning thus far, it's way too early in the week to rest on our laurels and say, great, the path is all clear for us to go adding more aggressively to our commodity positions. Let's take a look at the price of gold. This is a 4 hour chart. You can see that gold bottomed out last Thursday and has been putting in higher lows and higher highs and has broken out above a couple of key resistance levels. Absent very strong economic data or Powell reinforcing the potential for a fourth rate hike this year, not that in the end I really think it makes a difference, but there will be a reaction to the downside for gold. In the short term anyway, I think that gold will continue higher. I have a lot more commentary with regard to all of the events coming out this week on the week ahead commentary. Again, go check it out. I don't want to repeat it here. But we are looking strong as we head into the new trading week. We're up $10.90 on the price of gold. Let's go to other commodities. Crude oil prices, they are down slightly, but net, you're seeing higher highs and higher lows. Now, a dropping US dollar is not going to help the price of oil move lower. It's going to help it move higher because they trade normally inversely of each other. Taking a look at some of the agriculture names, soybeans moving higher, very strong. Corn Wow, what a morning here for corn. Ripping up higher. We'll leave off with wheat ripping up higher as well. So what we can conclude here, folks, is that what I've been talking about for the past several months is that we are seeing inflation. It is reflected in the charts, and it has been reflected in the charts for a long time now, at least on the precious metal names and on the industrial metal names. Recently, agriculture has broken out as well on a weekly basis. They are rising, and we are positioned accordingly. All right, folks, let's leave off with Bitcoin 4-hour chart. News came out over the weekend that Coinbase was going to report, I think the number was 13,000 of their customers to the IRS as having taxable income. So goes the huge selling point behind Bitcoin. It's always the reason why I really never, and it's not just Bitcoin. I'm not bashing Bitcoin here. It's all cryptocurrencies. There is a naive assumption out there by the younger generation. It's understandable that the fact that you have this private ledger, and I don't know much about it, to be honest with you, but I do know about politics and I do know about the establishment. And the fact that they are going to be denied their tax revenue is a joke. It's never, ever going to happen. This is the same U.S. federal government that brought down the Swiss banking system, and all of those tax dodgers were reported to the IRS. These guys do not mess around. So to think that people are going to be able to hide their profits from the IRS is not to be insulting. A lot of young people are naive in general. I was naive, right? It's a naive assumption. So on this 4-hour chart, you're not seeing all that much of a major sell-off here on the news. I mean, we're down $480, but I mean, we've seen, 800,000 point swings in Bitcoin in a short period of time. So this is not good news, right? Because it really goes to the heart of why people buy cryptocurrencies. Now, on a daily chart, the pullback is fairly orderly. I mean, we're holding on to our support level here in white line. You can hardly see it, but it coincides with the 20-period moving average on a daily basis. We have an upper band of resistance. I wouldn't put a short on here. This chart is not telling me, hey, Bob, it's time to short Bitcoin through the futures market. No, I wouldn't do that. I think that there's a good chance that we could pop higher here. But the probability of us breaking down to new lower lows is pretty good, because that is the general direction of the chart. Or as I like to put it, the path of least resistance is at current to the downside. Let's segue now into our member stock chart requests. This is where we review the symbols that our gold members submit for me to review on video. I think I'm one of the only guys out there that does this. It's a lot of work, but it's very rewarding for member engagement. And many times we find really great opportunities through our members. So I have a new member that put up a symbol for me to review here. His name is Jonah. And Jonah, don't be the least bit surprised if your request makes it into our portfolio as one of our long trades, because it wouldn't be the first time. We have a lot of smart members who generate some really, really good ideas. So let's get to the charts. First chart up is Best Buy. I went over Best Buy back on February the 4th, and here's what I had to say about Best Buy back then. The correction had just begun to take hold, and let's take a trip down memory lane. Now, I went very bullish on Best Buy. It was one of our picks back here in October, November. And then we broke out, and it was off to the races. So a great trade, but I think that trade is over for a while. In all probability, we're pulling back down to $65 per share. And if that breaks, we can come all the way back down here to retest this support level between, let's call it $57.50 and $53 per share. Daily chart. So on a daily basis, RSI rolling over with lower highs and lower lows. Stokes, same deal. We have bulk lines on Stokes trading down below 50. And as I always teach members, when you have bulk lines on Stokes trading down below 50, do not go chasing rallies. Why? It's because rallies fade, much as this one did right here on Thursday. If you bought in the morning during that rally, you got sucker punched by Friday. Don't let this be you. Manage your risk and stay small. All right, so I mentioned on the 4th, February the 4th, that if we put it in a new weekly low, that we would come all the way back down and retest the support level. That's exactly what had happened. And then we bounced. So if you had a limit order in down there, you're sitting pretty right now. That was a nice risk-reward entry point. I also mentioned on the daily chart that with both lines on Stokes trading down below the 50 level, that rallies would fade. And you could even see here on the 5th, they tried to rally it after it gapped down. They filled the gap. It even went positive on the day, and that rally faded by the end of business. Fast forward to the 7th, after we had flashed a bullish key reversal on the day. This is your bottom here. We flashed a bullish key reversal. We closed off the highs of the day, so we had a bit of a fade there. Then fast forward to the 8th, we attempted to rally, and that rally faded. All while you had your Stokes down below the 50 level. Now, I will admit that the snapback rally on the Stokes is pretty impressive. We had a V-shaped recovery rather than a W-shaped recovery that we would come to expect from most stocks, and in particular with Best Buy, because it flashed a W formation here in the past, W formation here, W formation here. And in this case here, you have a V-shaped setup, and it's just off to the races. So let's go back to the weekly chart. Where do I think we're going? I think that if we make a high above the week of February the 12th, that in all probability we're gonna retest recent highs. Then the old adage comes into play. The test is always at the top. Do we break out or do we break down? If we close above 78.59, well, then we know that the path of least resistance has resumed to the upside. But the risk is, where do we enter now? Let's update the chart, and I'll come right back. We'll throw some lines up here. Okay, so I added this new resistance level. If we close above this resistance level at about 73, let's call it 73 and a quarter, you can scratch the itch, open up a position there. And rather than adding simply on a rally up and through the highs of February the 15th, I would rather wait, because we're so close to resistance. If we get above the highs of the 16th, that you're accepting too much risk. I would wait for a breakout above resistance here at, let's call it 75.18. That's where I would add my second allotment to my position. So A, a breakout above 73 and a quarter. B, a rally and a close above 75.18 per share. And then if we break out above this upper band of resistance, I would look to add more to the position. Take note of RSI. RSI has broken out. It pulled back. It retested the breakout point. It wants to move higher. I will caution volume. Volume is extremely light. So these two up days, Thursday and Friday of last week, were on very light volume. So a bit of caution. MACD looks good. So that's my play. Where would I stop out? On a close below this lower band of support, which is at, let's call it 71.55. Moving on to our next chart, U.S. Steel. All right, so we were long of U.S. Steel. We booked profits here. The shares pulled back, and they just ripped higher. I'm waiting for a pullback here and a retest of the support level. I want to be long of U.S. Steel. Daily chart. Let's throw some lines up here. All right, so I added an upper band of resistance and a lower band of support. And looking at the daily chart, I may get denied of my opportunity to buy on a pullback to this support level here. Why did I think on a weekly chart that I would get that opportunity? Let's go back to the weekly chart for a moment. We flashed a bearish key reversal last week, which would imply that we're going to get a pullback. But looking at a daily chart, we're consolidating tightly. We became overbought relative to the Bollinger Bands, not overbought relative to RSI, stochastics, but relative to the Bollinger Bands. We got extended. We pulled back. We're consolidating nicely. I'm not going to be the least bit surprised to see a breakout tomorrow. Would I buy that breakout? Sure. If we appear poised to close above this upper band of resistance, I would be a buyer. Would I prefer to buy down here on a retest of support at 41.66? Absolutely. And I would add more on strength. Now, if I don't get that pullback and I have to buy on a breakout, if I have to buy, that's so bad, right? Where would I add more? I would add more on a rally up and through 46.82 on a closing basis. Now, much as what we saw, I went over this with members on the week ahead commentary. One of my observations with almost every chart, every index, every stock, there were a couple of exceptions, but I went over about 20, 25 charts on the week ahead commentary, and the vast majority had very, very light volume on a weekly and daily basis last week. So be careful of this snapback rally because it's coming on light volume. Now, I like U.S. steel because I believe that eventually they're going to put tariffs on the Chinese because they're dumping steel here on the cheap. Besides the fact that you're going to have the transportation bill that's going to get pushed through Congress, that should help U.S. steel as well. So I think that the story here is good. The technicals are good. So I like U.S. steel longer term. Don't be the least bit surprised if we get long of it fairly soon. The next chart up, Carrizo Oil and Gas, CRZO, the symbol. Now, yesterday on the weekend commentary, I discussed the energy sector in great detail. Long story short, I'm bullish on energy. I love the consolidation of last week, actually the past 2 weeks. Good stuff, nice rebound off of the sell-off lows. Now, CRZO, it has fallen victim to the sell-off, but oil is rebounding. Let's update this once again. Okay, I wanted to add this support level here because it's been rock-solid support for the past 3 weeks, and prior to that, it acted as resistance for several weeks. So I like this support level. What I'd be looking for, I'll be right back, I have to add another line here. All right, so what I added here was a rather crude resistance level. So what my action plan would be here is that if you're dead set, if you're going to buy these shares, you can go ahead and buy it today. That's fine. Just use a stop right below 17.24. If we close below that level, we're coming down here to $16 per share, $16.10. Now, if you buy here, you scratch the itch, keep your buy small. I would look to get more aggressive if oil presses higher along with the energy sector and CRZO begins to break out above this upper band of resistance and in fact closes there, I would be a buyer. But you need to have the energy sector moving with you along with oil. That's your trifecta. And that'll help you balance out your risk reward by staying small with your opening buy and then buying on the validation of the strength of CRZO, crude oil, of which it trades in tandem with, and of course, the energy services sector. Daily chart. Now, on a daily basis, we have a double bottom setup on RSI, higher low. I think we're breaking out. Stochastics, beautiful, beautiful setup here. Double bottom setup, a breakout. We now have a higher low. I think we're breaking out. Price. The same consolidation I mentioned on the weekly chart, rock solid. Now, one could argue, and we have to point this out, that there could be somebody out there looking at this video, watching this video right now and saying, Bob, you're talking the bull case here, but I see a problem, and that what that problem might be is a head and shoulders setup. Left shoulder, head, right shoulder forming. So let's throw some lines up here. All right, so here's a more defined illustration of that head and shoulders setup. Now, would this deter me from buying the shares of CRZO? No. We've laid out our game plan already. We've made our observations on a weekly chart. We have rock solid support below. We know exactly where we want to get out if, in fact, this neckline here is broken. So we've defined our risk. Now we want to identify where we would want to open a position. You could buy it today. But ideally, you buy it on a close above this upper band of resistance. You'll pay up a couple of pennies, but you'll be paying up for the probability of having your trade work out more in your favor than simply buying prior to the breakout. How would I personally trade this trade? I would wait for the breakout. That's just me. If somebody were to say, in the forum, Bob, I bought below the breakout point, is that really that awful? No, it's not that awful. What's awful is that if you don't use a stop loss right below this clear and defined support level, right? We know where we have buyers below. We are reinforcements. I always like to use the analogy of stock trading being a battle. You want to put up a stand where you have your reserves, meaning other buyers willing to buy at these levels, but if they're overwhelmed by sellers, you had better take a tactical retreat by moving to the sidelines, or else your forces will be overwhelmed as the shorts lean into the break below support, taking it down to lower lows. So it doesn't matter whether or not you buy it just below this resistance level or just above it. What matters is putting that stop right below this key support level here. Volume, not too shabby, Thursday and Friday. That's good. Fedex, weekly chart. So we have a real serious breakdown here. We've taken a couple of big torpedoes below the waterline on Fedex. Now, we did bounce off of key support, and we did manage to put together 2 back-to-back weeks of positive trade. I wouldn't be a buyer of Fedex until we retested the support level here, where we just were, or until we broke out to new highs, honestly. I think that where you're buying it right now is kind of like a no man's land. We have resistance immediately above at, let's call it 260. So what's your real reward here for the risk that you're accepting? It's not a lot. Volume, horrible volume last week. Horrible. Daily chart. Now on a daily basis, you can get a little bit more tactical here using a daily chart. If you're dead set, you're going to buy the shares, you need to use a stop right below 247.27. This is your line in the sand. It's pretty good support. How do we know it's pretty good support? It's because it's been support in the past, back here on the 28th of December, prior to that on the 21st of December. It's also been good resistance. So what you would expect is prior resistance to now act as support. But just keep in mind that you have resistance immediately above here. So again, how much reward do you get for putting on a trade prior to the breakout? Me personally, I'd rather buy above 255 and then lean into the long position as we rally up and through these resistance levels here at 259, 265, and then we'll see whether or not we get above 274.66. Now, volume did rise into the back half of the week, on Friday anyway, but it was only at around average. For the rest of the week, it was below average. MACD went positive. Now, if you do buy today and we manage to rally up and through 255.11 and close there, just lift your stop up to right below that support level and keep doing so as we break out up and through resistance levels. Now, I think that Fedex, in all probability, I just can't, I'm visualizing it. I think we're going to pull back and retest the 226.20 level. That's my personal opinion. So would I buy it? Me personally, no. But there is a trade to be had here. I've laid it out on the daily chart. The weekly chart is just not conducive to a long trade right now because it's a higher level, longer term view of the battlefield. And tactically, prior to entering a trade using a weekly chart, I would want to see that W formation form. We don't have that yet. Shorter term, yeah, I think that we could possibly see a pop higher here. But you have a lot of resistance above, so just be careful. And that's it, folks. Everybody have a profitable trading day today. We have a lot of economic data. I went over it on the week ahead commentary in great detail. All the economic data that is set to be released, along with Fed Chair Powell's testimony up in front of Congress this week, and the impact that it can have on the markets. So go check out the week ahead commentary in the members area. Again, have a profitable trading day, folks. Be well.